All right, welcome to the show. I got really long time good friend Matt Helling on the show. Our families have been friends. We went to college together. And I know a lot about you. We'll only talk about professional stuff on this conversation. But I'm really excited.
Oh man,
yeah, no. I'm excited people get to know you not only as a banker but as a guy, as a person, because you have a really great family. It's been in real estate for a long time. But I do want to start by letting everybody know who you are as a professional. So, you're at First Horizon. I mean, you're at Iberia, now you're at First Horizon with the transition to the bank. You've been there for a long time. So how did you get into the banking world?
Sure. So when, after we finished LSU, the only job I was able to find was with an electrical supply company. So like basically I was selling light bulbs, and I was doing a management program. The company it was a Westinghouse company headquartered in Pittsburgh, and they would just, send young college grads throughout the country. And I went to the New Orleans office and didn't have, I had some guidance. They were really good to me.
Yeah.
But basically like I had to just start like doing cold calls and trying to drive new business. And so, I would, try to sell light bulbs, and I'd get on the phone and I'd make these cold calls in the office, and I still am not clear on how electricity works. And so I would make these phone calls, and then the office would just erupt in laughter when I was finished. And so it was like a really brutal introduction to the working world.
Yeah.
And I at a party in New Orleans was introduced to this guy, and he's like, "Hey, how much money do you make?" I was like, and I told him how much money I made, and he's like, "Well, how would you like to double that?" I was like, "I'd like that. I'd like that."
Someone's good at
doing anything other than what I'm doing sounds great. Much less like doubling my money was a dream come true. He's like, "You just put on a suit and tie and come downtown tomorrow." And so I did that, and
This is what I think it is that said this to you?
What's that?
Your first boss at wow, okay.
Yeah, Ted Noose now.
Yeah, wow.
I mean, tell me someone who's good at sales without telling me someone who's good at sales, right?
Yeah.
Which I mean,
he was one of the best
bankers, right?
best salespeople. To this day, like it's wax on, wax off. I find myself regurgitating what
You just have them in your head, yeah.
Mm-hmm.
Yeah.
Gotta love
and
that.
you worked with him for about a year, right?
Yeah, about a year, year and a half.
Yeah. And I remember us having conversations while I would go down to the Britannia branch, and I'd come and walk in the office, and we would just get to know each other. We were getting to know each other from a professional level, but just talking business. And you always referenced by how good of a salesperson that he was, and how much of an impact he made on you as a banker, getting yourself into the mortgage side of banking, which is a unique perspective of banking. Not every bank has a mortgage department. Not every banker does mortgages.
Right.
So it's a unique perspective to have, and to be in the banking world at a young age. I mean, you were maybe 25 years old when you got into it?
Probably 23.
Yeah, 22 years old.
23.
Yeah, you had a lot of experience. But I also want to highlight another person I know that's made a big impact in your life is Chris Brinson, who I know is y'all are partners at this point, right? Like, and at some level, doing business together and helping grow y'all's branch, right?
More or less.
Yeah. And so, between Ted and Chris, I remember Chris gave you a little note card, right?
Oh yeah.
And that note card had some like rules of the trade or like rules of thumb that you needed to follow as a banker.
Yeah. So whenever I went out on my own, I reached out to my boss, and we do some, I guess, joint ventures together, for lack of a better word. I reached out to him and said, like, what would you do if you were in my position? And he, was nice enough to give me like two, it was like on little stationery about this big, and he had three of them, and it was basically a, plan of action. And that's exactly what I did. Yeah. And I stuck to what worked. And
it wasn't just motivational stuff or like tools of the trade. It's like, go do this, then do this, then do this.
It's
like a plan
practical.
of action. Wow.
Yeah. It was, partner with a title company. I called Jared.
Right.
Start doing bank visits. I would go to all of the branches in the city that didn't have a mortgage loan officer affiliated with them.
Yeah.
2 coffees with realtors a week. I would do that. And I just noticed early on that, I would make 100 cold calls, wouldn't get any action. But if I would go and do these bank visits,
face to face, belly to belly. Yeah.
And they would send me deals, and the deals were coming from the bank. And so the real estate agent didn't really have a choice whether or not I was involved. But once I had my foot in the door and was able to work with them, then I was, as far as working deals, I was I was working both sides of the transaction.
Yeah.
Just to.
Yeah.
So I want to talk about. And
That's powerful.
I have a lot of friends in the lending world, and especially on the North Shore, there's not a lot of bankers that do mortgages on the North Shore. Most of
Right.
them is mortgage companies, and then you have the bankers that do the commercial and the business banking. But like as a mortgage originator in a bank, what angle does that give you to be able to offer more service to your clients?
So I would put it, I think the easiest way to describe this is we do most of what the mortgage brokers and independents do. So all of your conventional and Govy, FHA, VA,
Yeah.
USDA, we do those loans, but then we also have the bank's portfolio that we lend from.
Yeah.
Doctor loans, private banking loans, CRA, which are like more like low income redevelopment loans, things of that nature that we just have we have more scope in what we can offer.
Yeah, and I've seen it. I've seen y'all working deals, and you're able to be creative on both sides, right? You can try to plug them in the traditional type of financing that most people do in the mortgage company. And then you can, if it doesn't work, you don't have to say no, or you don't have to refer it out to somebody else. You can move it over to the bank side and maybe do a portfolio type of loan where the bank keeps it in-house, and you can offer something different than you otherwise could have.
Exactly. And that's what's nice is I have a tough time with the government rules. And it works both ways.
Right.
Where, if someone has like consistently earned a salary and they switch to being self-employed or 1099, all of a sudden we can't use their income. But there are also people like if they've declared bankruptcy within 4 years, we can give them a loan. It's like it doesn't always it doesn't always make sense, but like the bank is sensible. Like if
Right.
I have deals that
On
like
the portfolio lending side? Well, because you're not having to package it to some outside source. You are basically packaging it to y'all standards. And if you have to, you can go up the chain to say, hey, kind of argue the case and say, hey, like, let's see if this is something that we're willing, like, hey, let me see who I can talk to. Again, it's
Exactly.
not, let me just color within lines because it's going to be packaged and sold. A portfolio loan is, honestly, for real estate investors, I tell them all the time, like, don't neglect the power of a portfolio loan, especially with like a local bank, because there's some opportunities there that it's not going to, fit some of these other things that you're looking at.
Oh, exactly.
Yeah.
Tell me, so to talk about New Orleans and your, the tie that you have to New Orleans, because I think we talked about this a second ago with another person we were interviewing, and we were talking about the perspective of a real estate investor and a professional like we are, that if we just focus on the traditional residential stuff and we don't
So
think
that's
outside the
Fannie,
box,
Freddie, VA, USDA, maybe conventional.
if we don't do anything outside the box, then we may not see or know how to solve a problem that may pop up. But I think what's interesting and unique about you is that you and your wife Alyssa deal with difficult deals. I didn't even mention this to Courtney, but Matt's wife and him have invested in some real estate themselves, and Alyssa invests in some creative stuff, and she deals with some hairy situations. And so from your personal perspective, you see what a real estate investment can do for people, especially in the city, right? You can get a double where you can live in one side and maybe invest on the other side. And so having that perspective has got to give you an edge. Has that helped you in your career building relationships with clients?
Yeah, especially younger folks who are, wanting to get started in real estate. I think it's I can see their future.
Yeah.
And so from that point of view, it's certainly helpful.
Yeah. And are you and Alyssa working on anything right now?
Right now, no.
Really?
Actually, not actively. Yeah. We always have. I mean, we've had
something.
deals under contract for years, and there's always something floating around, but nothing. No flips at the moment.
Gotcha. And y'all, but y'all house you're living in now was a flip that y'all did together and y'all moved into, right?
Yeah. I mean, basically what we did was we just traded up, bought the double with 5% down, built $200,000 in equity, rolled it into the next house, built another couple
So you
$100,000
sold
in
the
equity.
duplex. You did a Section 121 with the IRS where it's like tax free if you sell it if you lived in it. And
We did
brilliant.
it twice. Yeah. Shout out to Richard Morales at Roth Law Firm. He helped me big time. He's a tax attorney, not a title attorney.
Structured
Well,
everything.
no, but honestly, it's a very brilliant strategy. I've done some of them myself where the IRS, they're like, usually when you flip stuff, Uncle Sam's like, slap on the hand, we're going to take a portion of that, right? But when it's your primary residence, it's like it's a wealth hack that when you live in it for at least 2 years and you either increase the value either through time, market appreciation or renovating, which it sounds like you guys did. There's a level there that, it's tax free. For a couple, it's up to $500,000 for a couple.
It's the best deal running.
Yeah.
No, and people don't understand.
But I think that's something.
But that's cool that you have that
perspective
background.
I wanted to put forward for you because I know that if young people like we are that want to live in the city for a little while but don't necessarily want to live there I don't know where they want to do or where they want to be, can take advantage of some things of using it as a primary and then turning it into investment, but be able to see into the future and have somebody who not only advises you from the bank perspective but also has been there and done that is a huge help for people.
Yeah.
And I think
like
it's
that.
a great thing to be able to tell people that you know how to do, for sure.
Definitely. And that's like the one thing I try to, with all of my clients, is to bring some realism because, with your background, like it is not for the faint of heart. Doing these projects is stressful. I remember on my first deal, I borrowed more money than I should have. And I was doing this flip and there was a Halloween party and I was so sick about whether or not the house was going to appraise so that I could get the equity that I needed to pay off the people who I borrowed the money from, that I could not go to a Halloween party because I was about to throw up for something that was going to happen a week down the road.
But there's so many advisors that give advice for people in this industry that have never gone through that feeling of being able to translate that to their clients. I think it's a big deal because, again, going back to the bank, right? First Horizon's a bank. You're a mortgage lender, right? You can help somebody get into that deal, but also have resources on the commercial and business side of y'all's bank to be able to refer people to other places and get both sides of the advice coin and help people put the right foot forward and anticipate what they're going to run into. Because that feeling of feeling sick because you don't know if you're going to be able to pay your bill is something that is real and it's not fun.
Well, plenty of people have stopped at that feeling and not progressed, but one of the best things that can help, I was talking to a single mom this morning who was looking, she was like, I just want a better future for my 2 kids. And I said, look, if I can do it, you can do it. Like plenty of people who are average folks, they can do this. And if we can do it, you can do it. Like real estate's not rocket science, but you do need to have the right team. Like there is a level that, it is scary, right? Like there is those things, but at the same time, I'm also like, look, yes, let's check off, make sound decisions based off of sound advice that we're getting from our team, from advisors, things like that. And we're not trying to be reckless here, but at the same time, it's like, all right, I've done my homework. I know what I'm looking at. I know it's scary as hell, but we're ready. Let's go.
Yeah. And I want to say this before we transition to the next segment too. What's also been fun as you and I've grown into this business is watching our families grow too. And I know that you've got a couple of little kiddos. You got a set of twins.
I had twin boys, and 15 months later, I had another boy.
Yeah.
So I have
Bless your
Irish
heart.
triplets.
Yeah. Which is awesome. And they're cute kids too, running around in New Orleans. And I love seeing you and Alyssa's pictures of the kids and, just again, knowing you for so long and then seeing all the things that we're doing now is just being grown-ups, which is funny because 15 years ago, people would have looked at us and been like, no way. It's fun to see it happen. So let's transition. Me and Courtney really love talking about difficult deals, and everybody has a different perspective. We've had people that have focused on the insurance world, the market that we're in, and people have talked about specific type of deals. And lately we've had people talk about broad real estate in general, but I'm excited to talk about the medical loan products that y'all have. And while it's not necessarily a difficult deal, it's a perspective that not a ton of people can offer. And I think it solves a lot of problems for the medical community in town. Let's
address what that problem is. So before we talk about the actual loan product and stuff like that, why does it exist? What's the problem that doctors and the medical professions, like what are they, I guess, what's the original issue that caused this to need to come about?
So the issue is they've spent their adult life until they're 35.
Yeah, 8 to 10 years or whatever it is. I don't know, something like that.
in training. So, if you count pre-med, you have 4 years, 4 years of med school, 4 years of residency, 4 to 5 years of residency, another year or two of fellowship in some cases.
Yeah, so my numbers may be off. So more.
So it can be, pushing 2 decades of training. And so you go from having a pretty modest income and lifestyle and debt, and then all of a sudden, like your income skyrockets. But you haven't had the time to build the nest egg that you need for a down payment. And so what we'll do is we'll allow people to borrow 100% up to 1.5 million.
Wow.
Okay, so the issue is because they were in school for so long and they probably have debt, student loan debt, but they haven't had a lot of discretionary income.
Correct.
For like the down payment. But then now, because they're a doctor, because their income's high, they're like, hey, well, I don't want to go into like a $150,000 starter home. They're like, hey, I'd like, okay. So that makes sense. Keep going.
Exactly. No, and so if, for instance, if you're a neurosurgery fellow, you make $70,000 and then you finish neurosurgery fellowship and you could have a contract with a hospital making $800,000 a year. And if you have a spouse who works, you have, we're looking at these deals, and all we do is we take your contract and we use that income for qualifying.
Yeah.
So if you're,
I think that's brilliant.
Yeah, it's great, and I've seen a lot of doctors
it's collateral,
utilize those. Yeah, and so you can put 100% down on this, which is a big part of that.
No, it can get qualified for the loans for 100%.
Yeah. That's what I meant. Yeah, qualify for 100% financing. And then, but what about the PMI and all of that type of stuff? Because I know people are worried about not putting any money down.
There's no PMI.
So there's no cost from an insurance standpoint.
Yeah. And as far as the bank is concerned, like these are great clients. I mean, being in a bank, we see this as the entry point where they'll use us for their private banking services, wealth management, if they want to buy into a practice. Yeah. We want them to come to First Horizon for all of their financial needs. And so
I think that's smart.
Yeah.
It's seen that I sell a lot of properties on seller financing. And when I look at some people who you want to look at the person, like, yes, look at the numbers, but then you want to look at the actual, who's your ideal client and why do you want them? And so I think this is like a brilliant to speak to the philosophy of it. Why do we want them? Absolutely. And I'd be honest, I love renting to like doctors and stuff like that because like they're never there, they're never in the house, things like that. And yeah, I understand.
And as people, I mean, you know this well, like they have a truly difficult job. Like I might think my job is hard, but like it pales in comparison.
Yeah. There's actual life and death.
Yeah.
Like I mean, high stakes, high stress, lots of red tape.
If I'm not mistaken, I think it's one of the professions where if they were to have financial issues, that might overlap into their job too, though.
Like a bankruptcy or some sort of issue on credit or some delinquency that it might affect their ability to get a job. I think that's the case, but not as much as like a CPA or a banker or something like that. It's not dealing with money as much. But I can tell you, we've done a couple closings for guys and girls that are in the ER doctors, and they are in a stressful situation, and they're dealing with people who are very sick. I have a friend that is an oral surgeon, and the time and energy that they put into their residency and their fellowship, it really, like, they put in that work to earn that contract, and they're making a lot of money, and they are great clients to have because they come back for more stuff, and they usually are buying businesses, like you said. So it is a plug and play for a law firm to deal with those people, but similarly for you as a banker to be able to offer other services to them.
Yeah. And I mean, I see this as a relationship business.
Yeah.
And they have been like by far some of the best relationships I've had.
Yeah.
I mean, a client of mine also helped get my grandmother into a skilled nursing facility and is taking care of her. Like, he's been amazing. At an ENT, my son was having serious issues. She was amazing. Like, this is all just from being in this sphere. And I could not pass an open book chemistry test or biology test. Like, I have such admiration for like what they do, like how technical it is, but how personal it is at the same time. It's just what they do to me is miraculous. So I'm just grateful that I can be a part of this like little piece of.
Yeah. Well, and having the right team around you and building a relationship within your community is huge. Because I mean, the work coming on the back end doesn't come unless you build a relationship with these people to help them. Because I mean, at the end of the day, by choosing them as your service provider puts more money in their pocket, which is you adding value to them in that way. But you building a relationship outside of just doing their banking and helping them with their loan allows you to get more of that work on the back end. Y'all get, and it's a community, especially in the New Orleans market, small enough to where people know each other, especially when you make a name for yourself. And so I'm sure that they're now spreading the word to their doctors and friends that are moving into town that are getting contracts that they should call First Horizon to do that, because that's just how the relationship world works in general.
I love that.
Yep.
Yeah, I always say New Orleans is a well-known small town. But then also, so I have some family who are in the medical field that's a lot of their social sphere is because there's such long hours and, you know, let's say it like trauma bonding in their situations. But I know a lot of people in the medical field spend time with others like, and, you know, because they don't have a lot of extra time to have like, you know, crazy hobbies or whatever. But so a lot of times they're spending time among their friends. And, yeah, so I think it's very, I love what they do for the community. Like every community we need, like our backbone is supported by like the medical profession. Right. And so I love that. And I love how you guys are catering to them in the sense of like, hey, we see that you have this problem. We're here to help. Yeah. And we're going to build something to help you overcome that.
I want to talk about the technical side of the product too. So it's a medical loan, doctor loan, but who qualifies for this loan?
MDs and DOs.
Gotcha. And DOs.
There are a few other specialties that qualifies as well, but it's primarily MDs.
And what is a DO?
Dentist office?
You said MD and DO?
I forget the acronyms escaping me.
Is that a dentist?
Can we cut this?
Yeah.
It's
No,
not
you're
a dentist.
you're good.
Dentist is DDS.
Yeah, that's what I thought. I never heard of DO. And so the product is at a fixed 30-year mortgage and with no PMI. We said that earlier, but it's a fixed 30-year deal.
So we have a 30-year fixed. We have a 10-year, 7-year, 5-year adjustable rate mortgage. And it's great because let's just take the 5-year adjustable rate, for example. It's a 30-year term, so your loan payment looks the same as if you had a 30-year fixed. But the rate is only fixed for 5 years. And after year 5, the rate can adjust. There's no balloon. So folks who are going into who are in residency in Shreveport and they know that their plan is to do fellowship in New Orleans.
Because they may not, stay here for a long time.
Yeah. Any type of like shorter contractual agreement where, you know, this is just a stop along the way. Mm-hmm. The ARM makes a lot of sense. Or if you know, like, okay, this isn't our 5 to 7 year home, then the 10-year ARM makes sense. Gotcha. And the rates on the adjustable mortgages are lower.
Okay, interesting. Okay. Mm-hmm. And I mean, and just so everybody, a lot of people who are not in the real estate world worry about that adjustable rate and when it changes and how that can maybe blow up in their face. But at the end of the day, you can always refinance out of that adjustable rate loan whenever you get the opportunity.
You can. And like I have a 10-year adjustable rate on my house. Like this isn't something that I sell that I wouldn't personally have. Yeah. It's great. So if you think you're in a 5 to 7 year home or your income is on a pretty steep trajectory, the 10-year ARM makes sense. Mm-hmm. It gives you enough flexibility that, 10 years is a long time.
So much stuff happens in that time.
Yeah.
Well, and it's I've read the actual fine print of a handful of adjustable rates, and there's ones that I'm like, I'd do this one. Like some of them people, I guess they just think some of the scaries on, and I've read some of those, but.
And I'm thinking that.
It's usually the wide spreads.
Like wide spreads, 3-year ARMs, like 3 years.
Yeah, the shorter stuff, the wider spreads,
Because the 10-year ARM, your payment does not change for 10 years.
Yeah, and I know that's not what the stat now is, but for a long time, every 5 to 7 years, people were moving. I know it's changed a little bit with the long, low rate environment we had, but shoot, I feel like I was moving every 2 years for a while. When you think about 10 years, time and circumstance, but especially in that field. Mm-hmm. Because but then what also happens in 10 years? So one, they could get a contract somewhere else, but they could have also now had enough discretionary income that they can have the money down to then, refinance and get on a more secure, like long-term loan, which you guys can offer them, or they then their family's growing at that point, in 10 years, right? Like there's a lot that can happen in 10 years. And so the main point is not don't do X, don't do Y. It's, well, what does that mean? And it's looking at the terms. And so for a 10-year balloon, yeah.
Yeah. In order to qualify, it's important that we said you have to have some sort of a contract in place with an employer in order for you to be able to qualify for this loan. Because and to kind of lay the foundation a little more, you tell me if I'm wrong, most loans you're qualifying based on 2 years of job history, right? Or in some instances, if you have your education can help you qualify, which this is what you're using in this scenario, plus a contract from an employer. What does that mean? Do you call the employer and they send you a letter?
Yeah. So, and this is typically provided to the doctor from HR. So St. Tammany Parish Hospital will issue Dr. Migas. They'll say, thank you for accepting a department or accepting this position with our anesthesiology group. Your salary is $500,000. Your start date is August 1st.
Gotcha.
It's usually pretty brief.
Yeah.
And then
so it's a contract of employment.
Yeah, it's an employment. And so they give us that letter, and they can close up to 6 months before they start their job, which is great because, if you're moving from Rhode Island to New Orleans and you want to familiarize yourself, or to the North Shore and you want to familiarize yourself, like, do I want to live in Madisonville? Do I want to live in Covington? Do I want to live in the Garden District? Do I want to live uptown? If you're not sure where you want to live, this gives you enough time it gives you a long enough window to shop to where you're not rushed to make a decision, because with the conventional loans, your window is like 30 days. And so the timing, like, almost has to line up perfectly.
Hey, is there geographical limitations to this program for you guys?
Just in our footprint. So
where's y'all's footprint, by the way?
The SEC.
Okay, gotcha.
SEC. I
love
that. He's
from basically North Carolina.
SEC, not like the securities, but the football. I was like, I'm not gonna lie, my brain went to the securities at first. I was like, okay.
North Carolina, South Carolina, Georgia, Alabama, Mississippi.
And was that the same? Did Iberia have this same program, or is this a First Horizon program?
We had one,
but it was not the same.
And it's just supersonic with First Horizon. Usually, someone asked me the other day, like, why I've stayed at First Horizon. Often, mortgage companies are the losers in bank mergers. Like, it just gets too clunky. The management gets shuffled up. They consolidate operations.
Sure,
it just gets harder to close loans. But with every time we've merged with the bank, like, the mortgage company has gotten better.
Wow, that's great.
Which is...
Yeah. So fun fact, in the last decade, I've only ever used a bank once. In my hundreds and hundreds of transactions, I lean toward the creative financing, whether with sellers or with, private individuals funding my deals. But only once did I use a bank loan, and it was with Iberia when I had a home equity line of credit. It was like my second deal ever. My first deal I bought, with some cash, and then I got a home equity line of credit on it from Iberia, and I used it for like 3 or 4 deals, but that is my claim to fame with bankers is I used one bank loan. It was a HELOC, so not really a normal product.
Everyone should have one.
Yeah. Anyway, so it was, but that was my one experience.
That's great.
That's awesome.
Yeah.
Who was your banker? Or do you remember who opened it?
Janet Patton. Out of Slidell.
Okay.
I want to say that was her name. It was like 10 years ago.
Well, let's transition one more time.
And I keep going back to her because I didn't use bank products, so I felt bad.
Yeah. Well, let's transition one more time because the last thing I want to talk about is marketing. I love marketing. It's my favorite part of the business. It's relationship based for me. Everybody has a different way to generate business. And as a mortgage lender, similar to maybe a real estate agent, you have some specific ways you can generate business, but bankers have a unique perspective. And so I know why when people ask me, do you think I should join this bank or that mortgage company? I always give them the caveat about why banks are a great place to work. And it's the relationships you can build within the bank and also outside of the bank. So how have you used the bank relationships for you to help enhance and grow your business?
The Iberia Bank was so involved in New Orleans that it just made it really easy I grew up in North Carolina and went to LSU, but I didn't have a very big network when I got to New Orleans outside of my LSU friends. So the bank, once I'd been there for 5 years, people just started to assume that I was from New Orleans.
Yeah.
Well, you stepped into a local footprint. Mm-hmm. Yeah.
Yep.
Yeah. I mean, they sponsor everything. So, nonprofit events every night, sweet tickets every weekend. Like it was just a good place to be as a young person.
Well, I know, a lot of the banking relationships that I have stem from me and you getting connected, right? With a lot of the people that we're good friends with still that are in the banking world. And I know that you spent a lot of time networking within the bank in order for you to build relationships with the commercial people that are meeting with business owners that also needed a loan, which was interesting to see. And it worked really well for you. And I think that we've had a lot of conversations about, what you've asked me, what does the other side look like when you're working in the mortgage world? You don't have a bank associated with it. And I love the idea of just utilizing the relationships inside.
Oh, yeah. I mean, Millard Morrison, Todd Johnson, Louis Bartels made my career.
Yeah. Those are the three guys.
So Iberia Bank had a management training program. And
I remember I heard about this.
And every year they would have, 15 to 20 young people, and they would put them through credit school, and then they would, some would go into portfolio management, like on the commercial side, and then others would like go into retail banking or small business banking. And so you just had like a huge crop over this 5-year period of, young 22 to 25-year-olds who were making their way through the bank and advancing in their careers. And like, we all became friends, and it was, yeah.
Yeah, you still do business.
It's been cool. Oh,
and so they were in a different department. Is that what?
Yeah, so they were just like, they were working in business. They were all working in business banking. And I was the one guy in mortgage.
Okay. And that's what I love, because it's like you're stepping into a network, mm-hmm. right? And you're using that network to really build allies to reciprocate, right? Mm-hmm. Like, and help folks. And so, because I'm assuming that not only did they send you business, but you sent them business as well, right? Like that's what those relationships look like. And I think that's huge. And then, it takes me back to the mentor you had who gave you the stationery. Uh-huh. And it sounded like what he did was he just took your shoulders and squared them in the direction. He's all right, now go this way and do this. Mm-hmm. Right. And that was one of the things he said to do, right? It was something along those lines.
The bank business that he recommended that you go do in order for you to build a relationship. And look, from a mortgage lender standpoint, to go to some of these banks that don't have a mortgage department, it's another lead generating source that you can
brilliant.
Reach out to.
One of my favorite books is called The Go-Giver by Bob Berg. And really small book. It's like I've read it 20 plus times. My favorite to refer to other people. And it talks about the 5 laws of stratospheric success. And one of them says that our income is directly related to the size of the problems we solve. And so like I just love to go find problems. That's a problem. They have a branch that doesn't have mortgage lending, right? Like great. Mm-hmm. I would love to be that for you, right?
I think also too from to know that their clients are going to get taken care of. And Matt mentioned this earlier today. It was a way for him to get to build relationships with the real estate agents without having to actually have the agents know or trust him at first, because the bankers were going to say, hey, this is who you're going to use internally as a mortgage lender. Right. And then you can get to know these people after you've shown that you do a good job. Yeah. Now y'all have a huge impact on I know Chris Brinson, your guy you sit next to at the bank, who's also a mortgage lender. Y'all have built relationships with most of the real estate groups in New Orleans, especially the ones you want to do business with. And they know that you guys, when y'all walk in, you dress like you are a professional banker, and you give that service. And I think that goes a long way to continuing to grow, right?
Oh, absolutely. I mean, when you were I was reading your favorite ways to market, that's always been going into a room with Chris Brinson is my favorite way to market.
Yeah.
What does that mean?
He's polished. He carries himself well. He's eloquent. He's professional. When he was 24 years old, he was running a pretty big division of Countrywide Mortgage. Yep. And so, I mean, he was just a superstar at a young age.
And he's a presence when he walks in. I mean, Matt's a tall guy. Chris is a tall guy. He's always looked super nice and put together. I always feel a little inadequate when I walk in the room with these guys because they've got their shirts tucked in and they're looking nice. But I think at this point, people expect they're going to get what they get from me. But
I know that's y'all's company policy, though, tonight.
Yeah, you have to be a little more laid back. But I mean, it goes a long way in New Orleans, right? Smaller community, but it is a business-based community, and people expect that type of professional in some instances. And I think it goes a long way when y'all walk in the room. People know what kind of person they're going to get by looking at you guys and knowing how you carry yourself, which is great. Well, cool, man. This was fun having you on, and I hope that every doctor in town sends Matt Helling their loan, or gives them at least the opportunity to market to them.
Yeah, thank you.
Yeah, man.
Thank you for having me.